Good morning, guys. Good morning, everyone. Well, it's your homeboy AK Blair in the building, aka the Nushi Gang. I'm so sorry you guys can't see me on screen. So, my apologies, and my apologies for not, creating more videos after I did the first one on my YouTube page. But I'm so sorry that I've been away for quite a long time now. But we are back. We're back. So make sure you hit the subscribe button, turn on the notification bell icon, and like, and please share to your friends so we can grow together. So as you can see today, I want to be diving straight into what we call the supply and demand zone in the forex market and how we can trade it. And I hope you guys are going to find something useful in this video, so make sure you watch till the end. So we're talking about demand and supply. What is a demand and what is a supply? Well, a supply refers to how much of a certain product, item, commodity, or service suppliers were willing to make available at a particular price, while demand refers to how much of that product, item, commodity, or service customers are willing and able to purchase at a particular price. Well, as you can see, we say supply and demand are the very dominant of price or any price. This applies to everything from your local farmers market to a rare, one of a kind jewel to the foreign exchange market. Traders that understand that the dynamics of demand and supply are better equipped to understand current and future price movements in the forex market. Okay, so often a currency pair will climb to an area of resistance called a selling zone, where sellers perceive there to be great selling potential at a relatively overbought price. The reverse is also true for currency pair that drop to a relative low levels called demand zone, where buyers perceive there to be a great value to buy. If you haven't learned the basics of supply and demand or would like to, then you can let me just dive in and give you some examples. So we have, the price moves in an impulse and correction wave, or we're going to be using the consolidating kind of trend as an example. Okay, so all right, so we have a zone here. Just hold on, guys. And we have another zone here. Okay, so I'm going to be changing this to red, and this should be green. Okay, beautiful. So you see the price move up to a certain level and then it reversed. Okay, so this is basically the best zone for sellers to take their short trade. Why this zone over here is the demand zone. This is the best place for buyers to take their trade. So that is how this works. Supply and demand zone are observable areas on a forex chart where price has approached multiple times. As you can see, we have price came here. Oh, sorry about that. Price came here, it reversed. Hold on. Price came here, it reversed, did the same thing here, another one here, and the last one here. Same to our demand zone. So you can see price has been reversing multiple times. Okay, so unlike lines of support and resistance, these resemble zones more closely than precise lines. Traders can customize the charts to identify the demand and supply zone. So how are we, the question here is, how are we to trade the supply and demand zone? That is what I want to be diving straight into. How can we trade the supply and demand zone in the forex market. Okay, so there's this little strategy I want to, sorry about that, there's a little strategy I want to be diving into right now that it is going to benefit us all in the forex market. Okay, sharp. All right, so you see inside this box, let's just say there's the current market. There's the current market, and this is what price has been doing in a very long run. Okay, so let's just say you do this on the higher time frame, because the higher time frame gives you bigger picture on what you're doing. Okay, so there's the daily chart. Let's just assume that this is the daily chart. Okay, and we assume that the price is somewhere here. All right, beautiful. So what you have to be doing is how to catch these moves. Okay, like I told you, the market moves in waves. The market moves in waves. It don't just forget about the stuff we did over here. The market moves in waves. So if you drop down to, let's just say, the 4 hours chart or the 1 hour chart, you get to see stuffs like this. Just give me a minute. Just hold on a second. We're almost there. Okay, let's just assume that this is the 4 hours chart. All right, so you get to see something like this. You get to see something like this. Okay, just give me a moment. Just give me a moment, please. I'm finding it. Okay, so I decided to do that off camera. Okay, so let's assume that this is the daily time frame, and then when you come down to a lower time frame like the 4 hours chart, you get to see something like this, where the market is making multiple higher highs and lower highs, higher highs and lower highs, and you have lower lows and lower highs in the market. Okay, so that's how the market moves. So what I want to be teaching right now is how to trade these moves, how to know when the market price is in our supply zone or in our demand zone. So that is what I want to be teaching right now. So when we say the current market price is here, so how can we don't just dive into the market. You don't just go in, oh, the market is trending down and you just want to click the sell button. No, you end up blowing your account. Okay, so the way for you to catch this move right now, okay, so I want to give an example from this first move over here. Okay, so sorry, just give me a moment. Okay, I want to give an example from this move over here, which is, let's just say, here. Okay, so you see the market making higher highs and lower, higher lows, higher highs and higher lows. So for you to catch this market, first off, you need to draw your trend line. Okay, we just said there's a fake out. Fake outs don't happen in the market as well. So you draw your trend line and the market is trending up. So what you'll be looking for here is just buying opportunities. You don't sell the market when the market is trending upwards. You end up losing a lot of money. So you don't have to do that. So let's just say the market is making impulse and corrective moves. Okay, so upon this pullback, that is where you'll be looking to go long in the market. And how are you supposed to do that? You have to come on the market, you draw your counter trend line. Let's change this to say blue. You draw your counter trend line like this. So if the market breaks with a bullish candle, that is when you should be looking for long opportunities. Okay, when the market breaks, that is when you should be looking for long opportunities. Okay, you draw your counter trend line. When the market is making a pullback, you don't have to trade. And then to get more confirmation, if you're to take that trade, you have to grab your Fibonacci 2 and you drag from the low to the high. So if it's in the 50 or the 60 level, you should be taking your trade. Okay, so that goes again for the downtrend. Okay, as you can see, the market made a shift over here, and now we had a change of character where we have broken this higher low. Okay, we've changed character, and you see it came back, retested, and now it's pushing to the downside. So what you have to do, you bring up your trend line and you connect the trend lines. Once the trend lines are connected, what you'll be looking for is selling opportunity. You don't buy when the market is making a pullback. You don't buy when the market is making a pullback. So what you have to do is for you to draw your counter trend line. You draw your counter trend line, and when the market closed below with a bearish candlestick, you should be looking for short opportunities. Same goes to this current market price. Okay, let's just assume that the market has broken the last high and is making higher lows and is about to make a lower low. And let's assume that the market just did something like this to retest the trend line, and it's going to come back down. So what we'll be looking for right here is selling opportunities, where you draw your counter trend line, and if a bearish candlestick close above, you should be looking for selling opportunities. As you can see, we have a lot of confirmation here where the market broke and retested the trend line. Not just the trend line, if you look left, you can see that we have a support that turned into resistance and vice versa. So let's go into the chart, the main chart, and see. So you see we have multiple supply and demand zone where the market reversed. So as you can see, price came up here. Like this is the daily chart. This is the daily chart. You see what price is doing? Can you see? The market moves in waves. Market has been making higher highs and higher lows. Higher highs and higher lows. So if you can see here, we have a strong demand zone. Sorry, a strong supply and demand zone over here. You can actually say support turn into resistance, resistance turn into support, where you go to lower time frame like the 4 hours or the 1 hour to look for trading opportunities. Okay, and this is where the current market price is at right now. So you can see we came into our supply and demand zone, and the market reversed. So if we go into a time frame lower than the current time frame we're using, which was we're in the daily to look for our major zones, and now we're at 4 hours to look for trading opportunities. So as you can see, we know that the market is trending downwards right now. So what we are looking for definitely is just selling opportunities. We're just looking for selling opportunities. So you see how price made an impulsive move and is making a pullback into our zone, and it's reversing. And I can see something like a double top over here. So we had a lot of confirmation that this current market price is coming down to this demand zone. It's coming down to this demand zone. So this is where maybe the price might reverse, or it's going to come down again, retest, and we're coming back down to this zone before we shoot up. So what we're definitely looking for is just trading opportunities. You don't trade against the trend. Remember, the trend is your friend. You don't trade against the trend. So how to catch all this move is for you to be drawing your counter trend line. As you can see, I've been trading this account for a very long time. This chart, I've been on this chart for a very long time, looking for trading opportunities by drawing what my counter trend lines. So this is what I advise you guys to be doing. Okay, if you're doing your analysis from the 4 hours chart, you should be looking for trading opportunities on lower time frame, like the 1 hour, 30 minutes, and your 15 minutes. If you're doing your analysis from the 1 hour chart, you should be looking for trading opportunities from the 15 minutes time frame to the 5 minutes time frame, and so forth. I hope you find this video helpful. Make sure you click the subscribe button, turn on the notification bell icon, like, and also share, so that we can grow together. So it's your homeboy Nushi Gang FX in the building, and thank you. And I'm gonna be dropping multiple and tons of videos now for you guys and for us to all grow. So thank you so much, and I wish you all a happy new year ahead, and we're gonna kill this market in the year 2023. God bless you all. Peace.